Good morning all and welcome to today's video. So today I have three pairs on watch and those are dollar yen, euro dollar and Aussie CAD. Just to say that I placed a trade on euro kiwi yesterday. So I'm going to break that trade down for you now. So I'm not going to go into the higher time frame quite as thoroughly as I did yesterday, but I just want to recap the trade as it was yesterday and as I took it to give you some idea of the thought process and how I managed it, etc. So why was I looking at Euro Kiwi? I was looking at Euro Kiwi on the higher time frames. The narrative, just running through it quickly, is that we had this 1, 2, 3 touch structure there, okay, which tapped into this sharp area of liquidity where there was a sharp sell-off. Okay, we had the middle section within it. So that gave me a clue that we didn't need to return to this area at this moment in time because this was a completed piece of structure. We'd washed out the liquidity structurally. Okay, so the next thing I was looking at is that we pushed down, and so from that area we'd push down with the sharp sell-off. Price had come back up, left a sharp hook point, a sharp area of value. Okay, price tapped into that area by way of a 1, 2, 3. Okay, now one of the reasons that made me think that we would likely come back up to take out this high here is because when we moved down from that area, we pulled back, as I said in yesterday's video, okay, about 80% of the move. Okay, so that was giving me a clue that this, because we had a sharp move down there followed by a sharp move up, that gave me a clue that this was potentially a 1, 2, 3 to take us up to this high to take out this high, which this high near missed too. Okay, so that was what I was seeing yesterday. We tapped into this low here. We'd done so correctively, and then we pushed up aggressively. And you could see on the weekly chart we had that very bullish momentum there. As I drilled down, we'd broken above this sharp area of liquidity, suggesting that there was not enough liquidity here to send price to the downside, which is why price corrected above it. Okay, so then what happened? We tapped into this sharp area of liquidity, but I said in yesterday's video, we don't normally see, if I just go down to the 1 hour, we don't normally see if this was a middle section. Okay, we don't normally see if this was a middle section, was it within this 1, 2, 3 touch structure, we don't normally see this much volume being built up, and then we move down correctively. Okay, so I said in yesterday's video, if we just take this move there, that was a corrective move down, and because we had all these sharp lows here, so we had the base of all of this, we had a correction followed by a bit of a sharp move up, and then we had all these very sharp moves down and moves up, which narrowly near missed to here. So I was just seeing this as a running channel, okay, and this is one piece of its own. And because of all these sharp moves and this base here, which we had, I said in yesterday's video that we would likely tap below here and then tap back up, okay, because there was likely a lot of liquidity here because of all of these sharp moves. And I said that we'd also, because we had a sharp move here, a sharp move up followed by a sharp move down, we'd likely tap into this area as well. Okay, retest the back end of that. Well, if we just test the theory, we did tap into that. Okay, so we tapped into that area, pushed back up, and then this was what I forecasted in yesterday's video. So what I forecasted was this. Okay, I was looking for that 1 hour push up. We got that. I was then looking for the market to correct sideways on the 1 hour chart. I was looking for one bearish 1 hour close. We got that there. Okay, so then I dropped down in keeping with my forecast. I dropped down to the 15-minute chart to look for entries. Okay, and if I just unhide the forecast there, you can see that we got. So I was counting the corrective candles. I was looking for 6 to 8 corrective 15-minute candles. So we pushed up, and then from here I started counting 1, 2, 3, 4, 5, 6, 7. I think there was 8. So we had the two tops. So I set my order on the break. Ideally, I would have liked it a little bit lower, but I was actually out shopping. I was actually getting some medication for my partner at the time. My partner has stage 4 cancer, which is unfortunately spread to other parts of her body. So I was waiting for the pharmacist to make up the medication. I would have had the order typically a little bit lower, but I had to go and collect the medication. So I was happy to just set it when price, I think it was after the 6 candles, not after the 8. And then, of course, this trend line kind of slopes down. So the order was a little bit higher than I would have liked, but that was fine. I put the stop loss just below in keeping with the forecast. And then as we got closer to, there was red flag news, okay, coming out of the United States and Canada, I believe, at 2:45 p.m. UK time. So just before that, so I was tagged in there at 12:45. That was plenty of time for this to move to the upside, and you can see it just trickled around. It just never committed. And then we got to 2:45, and then I just closed this uh, manually. I don't know why it's got it there. That's not when I closed it. I closed it literally just before, about 2:45 p.m. That's moved. So I closed it there. I was managing this on the 1 hour chart. And the reason being is because you might be thinking, well, why didn't you just leave it open? Well, who was it? My Forex funds. I know they've been involved in manipulation and all kinds of stuff, but my Forex funds, I think it was last year, released some data, and that data revealed one of the things that stood out to me. I have a near photographic memory for images and numbers, not everything, but those two things. One of the statistics that stood out to me is that of all the people on their funds, on their fund, I think it was 10,000 people. I might be wrong. There were zero, not 1%, not 0.1%, zero examples of people that were profitable trading through them that traded through high impact news. Okay. So, as I said in yesterday's video, I'm not interested in an anomaly where this may have played out, blasted to the upside. I'm interested in what, in trading with the money flow. And if there's no examples, according to one funding firm, of people that are profitable trading through red flag news, then I don't want to be doing the same. So I was happy to close this. And, if the market gave me another opportunity to get involved, then I would have got involved. So I closed this manually here for, I think this is about minus 0.3%. So I lost about 0.3% on this trade. Okay. And it's kind of played out enough. If I'd have stayed in it, I would have been at break even now, because we've moved up correctively, which suggests to me that this is not going to commit. Yes, these candles here were likely due to Euro Kiwi being out of session. Okay, the European trading session would have closed, and the Kiwi dollar being part of the Asian session was out of session as well. So we were trading within the New York session. But if this was going to commit, I would have anticipated it doing it through the night last night. Okay, and it hasn't. It's moved up correctively. Okay, so what does that tell me? That tells me, I think this might be more useful. If I just unhide put the forecast away. What this tells me now is that maybe this is a reversal structure. Okay, which is tapped above. So I'm flipping my bias again because of how price is moving. Okay, we have this 1, 2, 3, which taps into this exchange of liquidity, and what this is showing me now, because price has moved up correctively, what I'm seeing this as is a potential move back down, a move back up to tap into this sharp area of liquidity for a move to the downside. Because if you look here, we appear to be near missing. We appear to be near missing a sharp move up followed by a sharp move down. So we're always analyzing the nature of price, how it's moving. Okay, so if we do near miss to here, we will likely come back up, tap into the sharp area of liquidity. This is likely maybe the start of a FOMO move, and then we would have that impulse correction continuation to push lower. So, but the reason I was happy to take this trade is because even if that was to occur, and that was in my thinking, I was able to manage the trade, which is why I have my risk to reward tool dragged to here. I was able to manage this trade up to this area, get my risk off the table, or I would have been if I'd have stayed open through the, if I'd have, if we'd have had a bit more of a push up before that red flag news, I would have been able to manage this up to this area. I would have been able to get my risk off of the table. But because we didn't commit before the news, I just closed this manually because the spread on Euro Kiwi can get very, very high. And I noticed when I was waiting to see what would happen, I noticed the spread starting to creep up. Okay, many people think that's liquidity coming into the market. It's not. It's liquidity going out of the market. And why the market moves around through news like that is because it takes less traders to actually move the market because the liquidity has actually fallen out. So don't be fooled because you're seeing it moving that you think that's liquidity coming in. It's not. It's the complete opposite. Okay, so that is Euro Kiwi. Am I happy with this trade? I'm very happy with this trade. I did exactly what I'd planned to do. This was not a fear-based decision. This was a logic-based decision because trading through news is not something that you want to do. Okay, what I'm interested in is preserving the capital first, profit second. Okay, if most traders are doing it the other way around, which is partly why they're not profitable. So I'd already planned to do this if the market hadn't committed in my forecasted direction by the time the red flag news had come out. So extremely happy with that one, and I wouldn't do anything different if the same entry presented itself. Right, so I'm going to have to motor now because I've rattled on a little bit too long for that one. With that one, but dollar yen. Okay, so dollar yen, we tapped into this high, but normally on the higher time frames we break above if we're going to commit to the downside. We don't just literally just equal it. We can do, but more often than not we'll break the high before moving to the downside. Okay, the other clue that we are likely moving up to break that high is because if we just measure the impulse down, you can see we have retraced about 75% of the move now. Okay, so that's given me a clue that we're pushing up. You can see we have momentum there, pushing up to break those highs. Okay, the other clue was the fact that we had these sharp moves up. When we have these sharp pullbacks, that implies that people are trying to sell this whilst the orders that are still up here and being placed in the area are dragging price back up. Okay, we also tapped into this sharp area of liquidity, sharp move down followed by a sharp move up by way of a reversal structure. Okay, and we then push up and we get an impulse, running channel, and then a further impulse to the upside. Okay, so I'm just going a little bit more quickly because I've only got 20 minutes on TradingView to go through all of these pairs. I like the directness of this setup, which is partly why it's higher on my radar. We then break above where there was a sharp sell-off. There was a volume here and a sharp sell-off. We break above that, suggesting that there was not enough liquidity here to send price to the downside. Okay. We then drop out, and this to me looks just like a bit of an M style pattern to some extent. Okay, so we tap into. We don't really have any sharp moves here. Okay, which is probably why price never fully committed. Okay, we then tap into this exchange of liquidity, and then we leave a sharp footprint. Okay, sharp move down followed by a sharp move up, giving me a clue that this is the area of value, and this is actually now just an area of interest because price never committed from that area; it just came back down again. Okay, so this overall area now, we have an exchange of liquidity here where price did move up sharply, and then we definitely have a sharp move by way of this sharp move down followed by a sharp move up. We then tap into that area, and we're now trading, crucially, we're trading not just above here, but above this area of interest, and more importantly, back above here as well. Okay, so that is giving me a clue that this move to the upside could be well and truly in. So what I'm going to be looking for now from this pair is the following. So I'm looking for price to correct. We have the 1 hour push up now. Okay, what I'm looking for, this just looks a little bit underdeveloped relative to this move up, which has preceded it. And I wouldn't be surprised if a pair like dollar yen actually goes at the start of the New York session, which is 12 p.m., I believe. So we have the first top. Okay, so we have this first top there. We just look at this on the, so we don't have a second top. We have a first top there. Okay, so I'm looking for a second top. So I've set a Google Calendar reminder to remind me to check this in a couple of hours' time to see how this looks. And if we get that second top when we push down, then I'll be looking to, in keeping with this forecast, I'll be looking to get long on the break, and then I'll be able to manage this up to here for something in the region of 4.5% to 5%. And I will also simultaneously be looking for the risk entry within the flag. So for price to push down to this low to see if we get a second bottom. And if we do, then I'll be looking to get short, to get long within the flag as well, and then I would cancel the original order. And then, of course, if we kept going, the target would be that high. The next target would be there. Okay, so that is where I would use the mechanical management system and be looking to target 90% of the range from here to here. Okay, so for something in the region of about 8.4. So that is dollar yen. Okay, so now I'm going to move on to the next pair, which is euro dollar. So euro dollar on the higher time frames. On the higher time frames, we've tapped into this exchange of liquidity here, and we did so by way of this 1, 2, 3 structure there. Okay, we've pushed up aggressively. We then have this 1, 2, 3 into this sharp area of liquidity, this area of volume where there was a sharp sell-off. And then on the lower time frames, you can see that there was since that happened, we have a exchange of the liquidity here and a sharp sell-off. We tap into the area, push down, and I'm just seeing this as an impulse correction continuation to take us down to this sharp area of liquidity where we may be seeing a move up to this area to give us that kind of 1, 2, 3 to tap into here, because we've kind of near missed to it. Okay, so this is just a little play from potentially from here to here, but who knows, sometimes these trades can keep going. But you can see here what happens. We have a sharp move down followed by a sharp move up. We tap into that area, we move to the downside. Then what happens? We have this structure here. We have a bit of a sharp move here. Price taps into that area, but doesn't find enough liquidity to send it to the downside. Then we push down aggressively, and we have that sharp move up followed by a sharp move down. We break below here, wash out all the liquidity, push to the upside. I would imagine a lot of people were very confused by what was happening here. But then we tap into this exchange of liquidity, which just so happens to be the retest of all of these sharp moves. Sharp move down, sharp move up. Same here. We tap into that and into this consolidation, and then we push down aggressively. And then what are we looking for today? You can see we're well and truly below all of these highs now. We've washed out all of the liquidity. So I'll be looking for price to correct sideways and for something like this, and then I'll be able to manage it down to here as a first target if we got the reduced risk entry on the break of the flag for something in the region of 2.5 to 3%. If we got the risk entry within the flag and a 10 pip stop, that would give us a risk to reward of about 5.5 to 6%. And then, of course, if this was to keep going, which I would anticipate it likely would, but after washing out all of that liquidity, then we have profit down to here for something in the region of 8.5%, and that would be where I would use the mechanical management system to lock in 90% of that move from here down to that area there. So that is euro dollar. I'm going to have to speed up again. I wish they would give us a little bit more time on these videos, but perhaps some of you could lobby TradingView for a little bit more time. So what I'm seeing here is we've tapped into this low here, so there's no need for price to return down to there at the moment. But what we do have is a sharp move up followed by a sharp move down. We tap into that area correctively, and then we impulse to the downside. We then correct below this low. Right, one of the reasons this is lower on my list is because we could potentially be seeing a move up to here because we near missed this high, near missed to here. But because we've corrected below this low, that gives me a clue that this is just an impulse correction continuation to push lower. Okay, so what I'm looking for here, what have we done? If I just break this down very quickly, because I'm again running out of time, we've then tapped into this sharp move up followed by this sharp move down, and there was a little sharp move here as well, which just so happens to be the retest of that, the back end of that sharp move there. Okay, so we've likely washed out all of the liquidity there. You can see we've moved down correctively. So this is not what I would expect at the minute. So what I'm looking for price to drop out, to show its hand. I'm looking for the impulsive momentum to kick in. If it doesn't, okay, so I'm looking for this, and then I'd look to get short on the break of the flag or within it, and then I'll be able to manage it down to these lows for something in the region of 3.5%. If price just keeps correcting like this, then it's likely that we'll push up and form something more complex, and I'm not going to try and guess what that actually is. I hope you've enjoyed this video. I hope you've taken some value from it, folks, and I'll see you again in the next one. Thank you very much indeed for watching.